This is really about being free to create what you want your life to look like. We each are our own hero. And how do we take the challenges that come our way and see those as the birth process of us becoming heroic? Can you meet that judgment that ultimately will surface with neutrality?
This is the Wall Street Coach Podcast with Kim Ann Curtin.
Welcome back, everybody, to the Wall Street Coach Podcast. Lucas and I today are very lucky to have Kathy Donnelly here today, the author of The Lifecycle Trade. Her book is so good. It's so much overview and yet spoken in such plain speak English. There is nothing over your head or feeling academic. It's just so simple to understand. Kathy, I'm so glad you're here. So thank you for your book and for coming to our podcast.
Thank you so much. It's very kind of you. I appreciate the invite. I love knowing that I'm talking to you while you're in Hawaii. That's super exciting. That's why I'm wearing my Roxy shirt today. So yeah, let's have fun.
Thank you so much. If you guys don't know, let me just tell you the subtitle to her book is How to Win at Trading IPOs and Super Growth Stocks. We got introduced to Kathy and her book thanks to Shane Dorian, who was on our podcast not that long ago, who is a big wave surfer, but also definitely experienced, sophisticated trader. He's been trading for 14 years. Shane just raved about your book, Kathy, and he was like, you have to have her on the podcast. I was like, well, whatever you say, Shane goes, so I will do it.
That's awesome. Thank you. Thank you, Shane.
Yeah, right. He'll be so excited that you wore that shirt. So he'll be impressed. I know it. All right. So here's Kathy's bio. Kathy Donnelly received her degree of electrical engineering from the University of Houston. And despite a successful career in the oil and gas industry, her goal to manage her own money was there for, I presume, a long time, but you can tell us in a minute. It was in 2006 when she met her team members in Naperville, Illinois, and was able to fulfill her dream and start trading actively. Today, she manages her own money while pursuing fitness goals, and she recently became a 2-time Ironman finisher, which is unbelievable. And of course, we have the Ironman here on the Big Island, and her mentors include the study team members William O'Neill, Dan Zanger, and Peter Brandt. Welcome, Kathy.
Thank you. Yes, if I'm lucky, maybe I'll make it to the Big Island for the Ironman. I'll qualify. So that would be super exciting. I have to say that.
I've rooted a gal on for the Ironman, and I was at 2 different locations when she came through. And at the end of that race, I mean, watching people cross that finish line, especially late at night after going all day, I just was weeping at their fortitude and their perseverance. It's the most inspiring finish line I could ever imagine standing on. It's incredible.
Yeah, totally. I hope to be there one day.
Well, you've already been there. You've done 2 Ironman.
But not in Kona. I got to get to Kona.
Okay. But any finish line, sister.
That's true. That is true. Thank you.
So tell us, like you spoke, your bio speaks to how, you wanted to always manage your money. Where did that interest even come from?
Yeah, well, I was really lucky. Both of my parents were investors. I mean, they had, my dad worked full time and my mom was a stay-at-home mom. And my dad learned from his father who invested. And so he was always telling us about the importance to put money away and to invest so that you can have money for retirement and, for things that may happen along the way, because your salary, depending on what you do, may or may not be enough. So he just always imparted that wisdom on us to get involved into investing. And, he'd given us some money and, told us we could pick a stock here and there. And the one I picked never did well. I don't think it went bankrupt or something. Yeah. But, so that was in my head, growing up. And so it wasn't really until, I guess, after high school into college where I had saved up some money. I when I was 16, I worked and always was saving my money because that was the other thing. Save your money, so you'll have money for retirement. So I was like already saving my money at 16 and then trying to learn to invest once I went to college. And so gone to, discount stockbrokers or this here and there and just tried so many different methods until finally I came across William O'Neill's book, How to Make Money in Stocks. And then that's what really clicked for me. And then I've just been on this journey, more directed journey ever since. So that's it in a nutshell.
It's amazing. It's amazing to have had that influence at such a early age. You're so fortunate. I think that makes a big difference, like just being exposed to it. I was also excited to have you on this podcast because you're a woman, and I wish we could have more women on this podcast, but there's not as many in this industry as I wish there were. So I'm just curious, how has that impacted you in any way? Has it given you an edge?
Oh, I think it's definitely given me an edge. And actually, I'm glad you mentioned that because I think this is the first podcast I've ever done that a woman is hosting it. I actually get to talk to a fellow female. So yeah, it's kind of unusual. Nothing against you, Lucas.
It's okay.
But yeah, usually it's there's a male counterpart on the other side. But I always, I guess, considered myself a little bit of a tomboy, and I was into scouting and sports. And then going into engineering, that was also very male dominated, but I never really thought about it. I was just like, it was like, didn't really faze me that I was, the only female. So I don't know if that's just because of the way I was raised or not. It just didn't really affect me. So, yeah. And then luckily, when I joined the meetup when I lived in Illinois, I met my co-authors, Boboch. She was, again, one of the few females that was there. And I just kind of latched onto her, got to know her, and then became the best of friends. So it's nice to have her, we both do the same thing, we both have the same passion. So we can travel together and have fun, but we can still talk stocks and all that kind of thing. Awesome. But luckily, yeah, I think my dad just always did teach us, do your best. And, when you're going for the gold medal or anything that you're doing, is as long as there's no question you're the best at what you're doing. It doesn't matter if you're male or female, you've earned it. It's all about meritocracy, in my opinion. Yeah. So I don't even think about it.
Beautiful. That's beautiful. One of the things that, Shane, as he was, he wanted to be here today and help us co-host. He was going to be a guest co-host.
That would have been so cool.
But he is such a jet setter. He was leaving on a flight right as we were recording, so he couldn't come. But he did send us some questions. So I'm going to actually open with his because I feel like, that's my way of thanking him for turning us on to you. One of the things that he was asking was that he's very curious about how you're looking at this current market, because of the massive sell-off that we had in so many sectors. How do you now find those best looking stocks that are setting up in this kind of environment?
Yeah, that's a great question. Well, for sure, and I know Shane will know this, Bill O'Neill's follow-through day methodology, the way that he tracks, when a new potential rally is starting. And it's too much probably to explain right now, but, basically when you hit your new low, that's kind of like a day one situation. And then if you don't still keep going lower, then you start counting days. And so the lowest low we had so far was Monday, I think, right? And then so yesterday was day 2, today is day 3. So actually tomorrow, based on Bill O'Neill's rules, if we don't have some crazy reversal at the end of the day today, we'll have a day 4 follow through day. So that's one way. It doesn't mean it's going to work, but it just means that there's the potential that a new rally is going to start. And Bill O'Neill would teach us to, dip our toes in and buy something. There aren't a lot of setups out there. And, unless you're a bottom fisher, which, I am not. But the other thing I want to share is, in addition to, kind of following Bill's rules, I also just want to watch the trend lines, right? So simply the 10-day moving average and the 21 exponential moving average, when those start to then trend up, then, that also tells you, okay, something's happened, right? And that's just in a 10, 21 day type period. Sometimes it coincides with the follow through day from the Bill O'Neill system. Sometimes they're ones before the other, a day or two, but they pretty much go in sync. But I think it's good to watch both because you have a pure technical of just a moving average. And then you also have the follow through day, but it takes into account, you have to have above average volume on that day. And you have to have a gain of like 1.2 to 1.4% that day as well. So you have to have volume and price. And, sometimes you might have one that looks like a follow through day. You're not sure and you're still waiting. But if you see those trend lines, then that can give you the additional, okay, I think this may actually be, in case sometimes it tries to sneak by. Does that make sense?
Yeah, definitely.
So that's what I'm doing, basically. Yeah. And then I'm looking for that in the stocks as well, the trend change in the stocks, where you can also similarly look at the 10-day moving average or the 21 EMA and, looking for those bottoms that are happening on some of those top stocks, whether they're IPOs or, more mature big cap names. So
it's awesome.
I just want to point out, I think for our listeners, you are a position trader, right? Or how long is your current, your standard hold time?
Yeah. So, if I can hold a stock for a year and a half, then that's my long-term goal for sure. Okay. So if that's how you officially define position trader, then yes, I'm definitely not a swing trader. Okay. Yeah. Unless I'm getting shaken out, because I do follow also the Bill O'Neill rule, 8%. And maybe even sooner in this type of volatile market, I'm cutting my losses. So yeah, I want 20% to 50%, which may or may not, usually won't be in a year's time. But if I can get to that 50% mark, then for me, usually that's that kind of gate passed. And then I can usually get to a year and a half.
Wow. Did you start with Bill O'Neill's style from the beginning?
Oh, no, my parents were value investors. So I looked into value investing and, looking for stocks that pay good dividends. And that didn't really kind of work for me because I didn't want to have to hold on to these slower moving stocks for long periods of time in order to retire. Plus it was like, you're looking out 5 years and I wanted to retire at 30. So I was like, that isn't going to work for me. Then I saw my parents always were like, oh, when a stock splits, it's so good. So then I would look at all the stocks that split and maybe buy one of those. It was completely random, all these different things. And then I met a person that did penny stocks. I'm like, oh, I should try penny stocks. And that didn't work for me. So yeah, I did try quite a few other things until I finally got to Bill's book. And then that finally, I didn't have to look anymore.
And what do you think? Did it speak to you right away as soon as you read his book?
I don't it clicked and I liked the aspect of the chart, but I think the number one thing that really helped was that Bill was a big promoter of IBD meetups. Mm-hmm. And I don't know if are you familiar with the IBD meetups?
No.
Yeah. So Bill O'Neill started a thing and they still do it today. And there's a lot of them online. So people that are interested from all over. There's many great ones. Boston IBD meetup, for example. There's Greenville IBD meetup. But basically, he, provided this avenue through the meetup.com system to create local meetups where, people that are like-minded and also interested in Bill's book would learn together in a library type setting. So when I first picked up his book, I found out right away about the IBD meetups, and there was one where I was living, just 20 minutes away. So immediately I got to go and learn with other people, and that's again where I met my co-authors. So I forgot the question now, but
well, it sounds like that book it gave you a support system and an anchor, because sounds right.
Yeah, so right, that was the question. So did it click right away? I got into it. I immediately went to the meetup. I had the support system. So immediately I had mentors and coaches. Yeah. And, you ask a question, you raise your hand. Why are you saying this and that? And I mean, I was the one that was always raising my hand. Well, why not this one? Why not that one? And really immersed myself into the group and learning, which is why I probably met my co-authors there and we're lifelong friends, because of that, because we were trying to learn together.
It's beautiful. It's beautiful. I didn't know about those meetings, but Lucas was saying, yes, he does know about those meetings. And I know Lucas has read your book 4 times, right, Lucas? 4 or 5 times?
Not Lifecycle Trade. No, I've read, but yeah, How to Make Money in Stocks. Yeah, I've read.
Oh, okay, good. That's the one you definitely need to read a lot of.
But I will eventually read your book 4 or 5 times.
Okay, good.
Exactly.
No pressure.
So did you have a follow-up question there, Lucas? I don't want to cut you off.
No, I just wanted to make sure that we were on the I guess one of my questions would be like right now, with the correction that's happening, is this a position where you're in cash, or are you still holding positions that are maybe up, something like, I don't know, if you were in like NVDA or Tesla that are up still a bunch from, a year and a half ago?
Yeah, that's a great question. Well, since you brought it up, I have to disclose it, right? So yeah, I have NVIDIA we could look at a chart, but yeah, I think I'm up around 203. I think it was maybe 300. Now it's probably, because it's corrected, probably 200 and so odd %. So I am holding that still. But yeah, I've sold all my others. Snowflake was a stock I talked about many times in different interviews I've done. I had to cut it. I was hoping that was going to be my next hold for a year and a half, but like all the other stocks, they rolled over. So I had to preserve my 20 to 30% gains that I had. But if the market hadn't rolled over, that was one of the ones I was hoping would be potentially like NVIDIA is now. But it wasn't. So you have to follow your rules and go on. So yeah, I'm in cash, and I'm just waiting. Like others like me are also waiting. So tomorrow, like I was saying, tomorrow could be potentially a follow through day. So I'll have to find something to buy, but I'll be honest, I don't really see a lot of stocks. And that's another indication, because, you could have that signal, but if there's no setups, and, a new setup after a low could take easily 4 to 5, 7 weeks. So, you have to be patient, and you have to, trade what works for you. So for me, that could still be a while.
Yeah. One of the things that I know Shane's pointing out was just that you have these very strict and clear rules that you really stay true to. And I'm just curious if you're open to sharing some of those strict rules with our listeners.
Yeah, of course. Well, a lot of them I learned from William O'Neill. I mean, he was very about, you have to have rules, and, they have to work for your personality. So my rules, might not work for you or for Lucas or, even Shane, right? Because you have to work with your personality. So I guess one thing, I'll just go ahead and share my screen.
Please.
Yeah.
Let me see. Okay, so you can see my presentation now?
Yeah, you sure can.
Okay, so this is going to be kind of weird because I have 2 screens. So to look at you, I have to look here.
Actually, you don't even have to look at us. You can just look at your, whatever works for you.
Yeah. Well, actually, I can look at my screen. I've never actually done this. So it's right here too, and it's right there. So I might have to turn my head a couple of times, but just so you know.
Got it.
All right. Okay, so the disclaimer, of course, all the things. But what I wanted to talk about was mental capital preservation, because the email you sent to me about maybe something that we could cover based on Shane's question about, how do I hold for the long term? And for me, it's really about mental capital preservation. And this is something we talk about in the book. And I've really latched onto it for myself. But basically, it comes from Jesse Livermore. He was one of the greatest traders of all time, and he said that preserving mental capital is more important than preserving physical capital. And I'm sure, Kim, you understand this because, it's all about our thoughts and our feelings about things, right? So, if we're thinking that, oh my God, I'm taking another loss or this or that, versus, well, yeah, I'm taking a loss, but that's because my rule triggered and that's just how it works. No big deal, right? And so you can totally, change your emotion just based on that thought process. So in the Lifecycle Trade, we created or coined this like holding method. And basically it's determined on the minimum percentage of profits to retain while holding a leading stock for bigger moves. So here's kind of the just easy summary. And I start this chart at 50% because I think I alluded to earlier. Yeah. Once I get like a 50% gain or more, then that's where I'm starting to look for the longer term, that year and a half. Anything less than that, the drawdowns are too much. And you got to, like the Bill O'Neill, you're going to take most of your profits at 20, 30%. So that's what's, really important ultimately. But once you have that big winner, 50% or more, here you see the drawdowns you have to withstand to as it moves up. So the more you make, the drawdowns are bigger, but your profits are also bigger too. So I think a lot of people, they just focus on like, oh my God, I can't believe I'm giving this much money back. But I'm looking at it like, well, yeah, if I buy a stock at a first stage base, which is what Bill teaches us to do, and a true market leader or a super growth stock, whichever term you want to use, is going to go through first stage, second, third, fourth stages. And other famous investors have different terms for it.
Sure.
They're going to correct, right? So if I know that going in and I have a certain minimum profit percentage, then mentally I'm okay with that. My mental capital, I guess you could say, is preserved.
Yes. Brilliant.
So I really just look at it, and now this is a little bit lower. I mean, when I say lower, I'm showing the chart for a retention of 45% profits and a retention of 35% profits. And the reason why we did this in the book is because we were really looking longer term. But for me personally, in my own portfolio, I just want to retain 50% of my profits. That's all for me. Like that's fine with me, and that keeps me with a steady equity curve. And because I know I'm never going to get at the very bottom. Again, Bill taught us that, and I'm never going to sell it at the top. So yeah, 50% is kind of like my marker, and I'm going to show you a chart where I did that. And this is from the book on how you calculate it. Yeah. It's basically the buy price plus the peak price, the 52-week high minus that buy price, MCP die 100, and that's how you get 50, 60. And you can pick your percentage, maybe you want to retain 90% of your profit. So you're going to have a really tight. But if you're willing for the long haul, I think 50, 60% is good. And then if you really think you have the next big, like, I don't know, Apple or Microsoft or Tesla, then maybe you could go even 35%. And Tesla is a really great example because it actually is retaining. If you had bought it, like when it first came out, and we can look at a chart of that too, you would actually still be holding it if you were willing to, only retain 35% of your profits.
Wow.
Which seems crazy.
It does.
But the 35% at this level, if you had bought it there, is still like, millions and millions of dollars, depending on how much you had initially invested, which is what's so crazy about it. You don't even think about it.
Wow.
Like, oh, that's only 35%, but because it had appreciated so much. Yeah. So, and then, some people can say, well, what about when it consolidated? That's dead money. And then again, that's all your personality and what do you want to do?
What's your temperament and what's your stomach, how strong is your stomach?
Right.
But you're strengthening your stomach with these calculations. That's what
Yes.
You're finding a place to anchor so that your expectations are managed in a very mathematical way.
Exactly. And because I always like math and science, being the engineer that I am, that worked for me. So here, I just wanted to show you CrowdStrike. So this is the most recent long-term hold that I sold. And I really like this example because this also is, right here. Do you see my cursor?
Yes, we do.
Okay, so this was the pandemic bear right here, right? So this is where we were going lower. Here's the S&P at that time. We were looking for, what's going to be coming up next. And this is a great example because you see I was drawing like a double bottom, and that's one of the classic patterns, a double bottom pattern. And so I actually was buying it where I had this little pointer thing as it came back over the 40-week line. So, I didn't buy it as it necessarily as it was coming to the bottom. And unfortunately, I don't have the date of when the actual fall through day happened. But I was buying it after the follow through day for sure. I can tell you that. I just don't know the exact date right here in this point. These are my first position. And then I draw a line here because this is the turbulence zone we talk about in the book. So basically you have the IPO base, it went up a little bit and it created this prior high. And so whenever it comes back to this high, it's going to create turbulence more often than not. And so that's another kind of like marker. I like to get in before that if I can, and then keep adding as it gets through. So I was also making ads in here and probably in here as well. So this is what, as one example of what hopefully I'll be looking for and finding whenever this market turns around. Yeah. Unfortunately, some of these recent IPOs, even from last year, they're really, really down low. So it's going to be really challenging. So I don't know, actually, to be honest with you, if there's really going to be a whole lot of IPOs. And I think that's actually a signal, right? We had so many IPOs coming in the market that, that's another reason why everything kind of has crashed as it has. Yeah. So we may not have as strong a year, but we'll see, but nonetheless, looking for something like this. And I'm going to show you these little alerts that I created. So I was holding it all through this and even up in here, and the 40-week line started to roll over. So this is where it's like, okay, is it going to make it or not? Yeah. So I've got an MCP 60. So that's retention of 60% of gains. And this was from my low cost buy point, and it was at 197. So it was right in here. So I was definitely not going to let it go any lower than this point right here. But I also use the 40-week rule, and we haven't really touched on that, but that's another rule we kind of give into the book for those that are interested in long-term holds. Yeah. It has, when we studied it, it had the most profits gain, but it also had the highest drawdowns, right? Because you're holding it for such a long time and, you're holding through all these bases, which, a lot of people don't want to do. So basically right here, what I personally do is I sell when it breaks the 40-week, and then my retention of profits of 60 and 50 are coming into play. Now you see this one's 197, but I use my highest cost basis, which is this next one, which is right around the turbulence zone. So I thought that would be a good marker right here, which was at 214. And so that was approximately, I think, the same. Let me see what that, yes, that was at 232, so 214. I was selling it in here at this point. And then I just, for fun, I did the 35%, only because there are some stocks that have held that. NVDA, Tesla, which I just mentioned. Now, this is pretty trusting, and I haven't been able to do it yet, but it is something that I'm kind of looking into on the side just to see if there's, like how common is it? Because really, Amazon broke it. Well, I don't want to say how many. I haven't looked at a whole lot, but Tesla has held it, and so is NVIDIA. So I'm just kind of like, how do you find those? Yeah. Always looking into more. So anyway, that was a lot of information. Does that all make sense? Any questions?
No, I think one observation I have is I think you're right, though. It seems hard to try to hold through that much of a drawdown, like that mental capital rule, right? Like I feel like that's the part that stresses most people out, is when you see something that goes from 50% down to 30% or 35%. How do you stomach that, right?
Yeah. Right. Well, let's look at the chart. So this is why I wanted to bring this up too. Let me show you this. So these are the sell rules we talked about in the book. And so this is what I just updated for you guys. So we bought them all on April 20th. So that was, let's see, April 20th. So I was showing basically where I had bought it. So right in here. Okay. So that's the buy. And then when did they all sell? So The 40-week rule, November 26th, your gain was 244%. So that was right here.
Mm-hmm.
Okay. And then the midterm rule, this one looks at the 10-week line. So the red line.
Mhm.
So right when it was breaking in here. So Lucas, you were saying, well, I don't know if I could stomach, all that. Well, that's what the midterm rule is. So it's kind of like, well, it's half and half, I guess you could say. Here it was breaking the 40-week line, and we don't have time to go into all the details, but essentially it was taken out here, and that gave you 171%. But again, it took, if you this rule is good for me and my personality, then it can take those emotions out of it. And then the ascender rule is kind of like a 3-part rule, where it takes some off at the first break of, I believe, the 21 and then the 50. And then the last one is based on 18 months or 500%, whichever one comes first. So this shows you the percentage gains at each of the different levels, and then the overall of 117. So I'm going to skip by the Everest rule because that's more of a parabolic high mover. But you can see which one was the highest return. The 40-week, 244. 171 maybe is still just as respectable and maybe less mental anguish, depending on your personality.
Yep.
And then the ascender rule, a little less, right? But you're taking gains on the way up. So that also could, help from a mental standpoint. But from my perspective, I'm good with this. I'm good with the 244. And, hopefully one day I hope to catch the one that, still hasn't broken the 40-week line, or even goes even longer. They're out there. I can't quote one specifically. But I guess that's my ultimate goal. I mean, Shopify is close, and, it's broken like all rules and just seems to keep going. I haven't looked at it recently, but Shopify is such a great one.
Yeah.
Anyway, I'm going off track, but
Oh,
so
good.
how do I do it? That's how I do it. I use mental capital preservation and these percentages to help me for the long term. So
Did you start out with this knowledge of your stamina at those different levels? Did you grow into it over time? And give us also just how long you've been doing this for, timeline.
Yeah, I absolutely have been. I'm going to go ahead and stop sharing my screen. You can go back to it if you guys want later. Yeah, because when I was learning from Bill O'Neill, I immersed myself into the material and the curriculum, and I went to the in-person seminars, which unfortunately, don't really have those anymore. But we have all these great podcasts now, so that's
right.
But they at the beginning of the seminar, it would be in December, and they'd go over all the great stocks from that year, and they'd be like, okay, if you bought it here, kind of like I was showing you with CrowdStrike, you buy it here, you sell it here, 300% gain, and then buy it here, next one, 500%, all in this like year and a half time frame. And it would always be showing it when it broke off at the 40-week line. So in my mind, I'm like, well, how are they doing this? How are they getting these grades? I'm like, oh, well, they're just literally holding it all this time until it breaks that line. So when my co-authors and I got together and we were trying to come up with rules to test, I was like, we got to have a 40-week line so that, because I want to see what it is, because that's the kind of trader I wanted to be, because that's what I would see on the screen and I would aspire to. So that's really how it happened.
Wow.
And I was working full time at the time, so I only could look at stocks really in the evening. And so that was the other thing. I wanted to be able to, work out, train for Ironmans, maybe go on a trip and go surfing,
Yeah.
So I didn't want to be tied to the computer, swing trading and all those kinds of things. That was just not the person I wanted to be.
Wow. Did you find this mental capital equation over time? Did you manage your expectations right from the get-go, realizing, okay, I'm going to have to be with these volatile stomach drops, and I'm not going to let that burn right through my courage to stick with it.
I really didn't know about that. The mental capital preservation rule is really all thanks to Eric Krull. He, one of my co-authors. So my co-authors, I didn't say their names earlier. I should give them all a shout out. Boboch, Eric Krull, and Kurt Daill. Just really great people. But Eric Krull, really, he created in his own mind, and actually it might have been him and Kurt. I don't remember. So Kurt, I'm sorry if I forgot exactly. He came up with mental capital preservation, and he came up with a mathematical equation. Wow. So I was already doing the 40-week line on my own for, based on what I told you earlier, going to all those level 4s web seminars with William O'Neill. So I was already doing that. And then when I started paying more attention to what Eric was talking about and incorporating that, I was like, oh yeah, that helps even more, because now I know I'm not giving up all my gains, because I knew I was giving up gains, but I still had these high percentages with it. So I was like, that's okay. But now I know, okay, I'm retaining at least 50%. I feel even better about it than I did before.
Yep. So that began right at the get-go. Do you feel, how many years now you've been at this?
Bill system 2005.
Yeah, it's a long time. What's changed from when you started to now internally for yourself around how you do this?
I think the thing that's changed the most, and really just since we wrote the book, so I guess the book's 3 years old now, since about three years, is that I've narrowed my focus. So I really am trying to just focus on IPOs, and specifically this transition from the institutional due diligence phase to the institutional advance phase. So this right here, we call the institutional due diligence phase. Yep. And then once it passed the turbulence zone, we call that the institutional advance phase. So I really try to focus everything in this one area, because again, then if I can get in early and the stock is a strong stock, a super growth stock, changing the way we live, work, and play, then I can just sit. Then I don't have to do anything and, wait and then look for another one. And so I really have narrowed my focus more than anything.
Yeah.
Because I've achieved what I wanted to achieve, which was to not have to work in the corporate world. And so now it's just about narrowing in and focusing on what I do best. And so by focusing on those type of trades, that's what I do best.
Yep.
I have a question, because that's something we talk about a lot with our traders is how long did it take you to realize what you did best?
Well, honestly, it probably didn't take me that long. I don't know if I was lucky, not lucky. So I feel like 2009, the 2009 bull market that started in April or so, 2009, 2009 to 2011. Like that was my first real big success. I had Apple and Priceline, and
wow.
And I was able to hold them for a really long time. In fact, if I had known about the mental capital preservation rule, or even what I know now, I'd probably still have Apple potentially. I don't know, but that would have been really cool.
Wow.
And then also aspiring to be Bill and hearing the stories of Bill and putting a bunch of money and all the ones that were winning. I had a really great year or years in that time period. And that really kind of put me to that next level. And it was just doing what I just described, Lucas, which was getting in early and just holding on. So, and I had, big gains. So I knew right away that that's what was going to work for me.
Wow. It's amazing. I'm curious now, what's the thought process during a correction?
The thought process now is patience, mm-hmm. and You see the big gains, oh, now all of a sudden the stock's up 5%, like on Monday or Tuesday, all those reversals, they're tempting to buy. But the situation that I keep trying to remind myself is, remember when I said, I'm saying this to myself, that I don't have to I want to only trade proper setups. I don't want to get sucked in, because you get sucked into the excitement. You do want to trade, right? You always want to trade. So I just always have to take that step back and say, okay, I don't want to just, trade just for the sake of trading because I'm bored. I want to be patient and wait for my setup. So I think the thought process is, just patience. And actually, I just put a sticky note on my computer to remind myself, and actually I wrote down what I said earlier, 10-day moving average.
Wow.
And 21 EMA, and also shakeout +3. So for those that may not be familiar, you can Google shakeout +3 on the Investors Business Daily website, and it'll give you a definition. And I think it was, I don't want to quote, but Bill O'Neill, was it Livermore also, I think? Oh gosh, I feel so bad for not remembering exactly. I just read it too, because I was refreshing myself on the rule. But basically, it's almost like a double bottom type setup where, undercuts a low, and then if it regains it +3, then you can get in an early position. So you're not necessarily, but you have to be prepared in case it doesn't work, of course. But that, along with the trend change of the moving averages, those are what I want to wait for. And some of those it's just too early yet. So just trying to be patient.
But so it seems to me that you succeed at being patient. What do you attribute that to?
In general, I've usually tried to consider myself a pretty patient person, but I actually spent a lot of time last year, Kim, on managing my thoughts and feelings, and and I don't know if you've done this. You may be familiar with the TFA process from the life. No. So one of the podcasts I got listening to last year during the pandemic is the Life Coach School, and I'm not purposely plugging them for any particular reason. But it was basically this model. Brooke Castillo created this model where you have a circumstance with your thoughts, feelings, and actions, and what the result is, and you do both sides. So like the circumstances, I made trade. This for an example. I would never make 10 trades in one day, but let's just pretend. I made 10 trades today, thought, oh, I'm going to make money, feeling, desire, I don't know, action, make 10 trades and whatever. I don't know. I'm kind of just not even probably doing it right. But result, end up losing money because I made too many trades.
Yes.
Then on the other side, you have the same thing, right, about trading. But the thought is 10 trades is not going to make me more money. I need to wait for what works best for me, So then my feeling might be, calm, reasonable.
Right.
I, only make one trade because that was the only trade that matched my setup result. Feel good, stuck with my plan, prove to myself that, I could do it or whatever. You know what I mean?
I do.
Yeah.
It sounds like that process, it allowed you to step into, if I do choose this direction, this is what happens. If I choose that, this is what happens. Which one is going to probably suit me best at the end of it?
Exactly. So I try to do those a lot, and I can do it on any aspect of my life. And then whenever my brain feels like all tangled up, that kind of like untangles it, brings me back to reality, and then just go about whatever. So,
and ultimately that is your way, it sounds to me, of getting yourself you're looking at your own way of operating. You're becoming more self-aware, more conscious to the motivators behind the actions you're taking.
Yes, exactly. So when I see a day like Monday where I'm tempted, huge reversal, stocks look like they're making bottoms, but then like on the other side, it's to be like, but it's only day one. Let's not get too excited. Let's wait for day 4.
Yep. Yep.
Yeah.
It's awesome. It's awesome. I think that discipline and, the bumping into the fear of missing out is, we talk to traders all the time, and when they put their questions forward, they're like, why am I still afraid of missing out? Like, even though this is not their first rodeo, but it's so hardwired that unless you do really deep conscious work at looking at your options, you're going to just keep falling back into that same groove.
Exactly. Yeah.
It's tricky. Was there anything else in your presentation that we didn't talk about? Because it's a beautiful presentation, and I'd love to go back to it if there's some pieces there for our listeners that we can, before we wrap up, as long as you're okay staying with us, I'd love to see more of you in action so that they can learn from you and see,
Sure. We'll go. I got a few more minutes.
Beautiful.
I'll show you NVDA just because this was, we were talking about mental capital preservation. It was literally the buy point all the way back from 2016.
Wow.
And I don't know if you remember, this, but I remember this because this was one of the ones where like it had this great run and then it kind of people out, and it broke out on light volume. So a lot of people didn't believe it. And it ended up being this amazing run, obviously. Wow. And then of course it did break the 40-week line. So I would have been selling it here. But I was talking about that 35% of, retention of gains for really, really strong stocks, that this one never undercut.
Wow.
It was 123 and the low was 124. So it was really close, but it never undercut. And your gain at that MCP still would have been 275%, right? So, you look at that and you say, oh yeah. Now, of course, if you looked at what it was at the high, again, you'd have that initial feeling if you didn't have the thought process behind it and what you were maybe going for. But anyway, so this is one that, I'm watching. So this was cut off in 2021. This is an old snapshot. But that's one thing I'm looking into for studying. Here you go. So this was at the end of April last year, April, an unrealized gain at 570, and the current price of NVIDIA is more than that now, 1,600%.
Wow. So
something to look into, right?
Absolutely.
So secretly, I'm kind of looking into that more. Let's see. Zoom. This is an old chart that I was going to try to update, but I think this one has undercut. Let's look at. So this one undercut. So Zoom didn't make it. Low price 108, MCP 115.21. Let's look at the actual chart here for a second.
Sure.
Zoom. Yeah, where are we at? Oh yeah, we're all the way down to 140 now. Wow. I mean, we're almost back to just crazy. Now you'll see here, this is one thing I was watching. I'll share this with everybody. This is something I haven't talked about before. So sometimes, it will break that 40-week line and then it'll come back above it. I was thinking here potentially where I'm drawing my cursor, maybe this was going to be some kind of crazy lopsided cup with handle. It kind of tightened up, but it didn't work. I never made a purchase, but I was watching it because you'll see that happen, right? Like Shopify. And that's why I keep talking about Shopify because, like I said, it really is a great stock to study because I feel like it's broken all conventional rules and just going. But I got to see what it looks like right now because everything I'm saying could be incorrect. But it didn't make it. So then I started drawing this. Well, maybe it's going to make another crazy double bottom, and you can see I haven't extended the line, but it's gone much slower since I drew that initial line. So I don't think it's really in contention for a double bottom anymore. But this just gives you an idea of, things that I'm looking for and where I've made annotations. so people out there kind of understand my thought process.
And for our listeners today, we're talking on January 26, 2022, just so they have some context.
Oh, yes. Right.
Yeah. You didn't say the date earlier.
Here's the Tesla trade. So this is what I was describing earlier. This is also a late bloomer pattern. We created names for all the pattern IPO patterns.
Yes.
And this was the due diligence phase. Here was the turbulent zone, and this is where it broke out. This was when Elon Musk, or they said they were finally going to make money. Mm-hmm. And so it had a big gap up at this point. And I actually did play this. I bought it here. I ended up selling it here when it broke the 40-week line, consistent with the way that I trade that I've explained.
Yeah.
But I've done, I did the different calculations at the MCP 35 because you have to redo it, right? When you have every time it makes a new high, you have to redo the calculation to see where now your MCP 35, because obviously it's going to keep moving up. So here I was saying it did undercut if you enter a week, but if you had waited until Friday, you still would have had it. That was at this point right here. Wow. This was where the COVID bear market. So the COVID bear market, if you had sold it in a week, you actually would have been out. But if you had waited till Friday, you would have been fine. Wow. And so then now fast forward to today, and this is actually completely accurate because this is January of 2021. But I can tell you it's still holding. You'd be I don't have the 3,341% gain at the MCP 35. So, and we're much higher than that now because I haven't been able to adjust this, and this is also split adjusted. So, wow. So there's potential there, and I guess the kind of person that I am, I'm interested in potential that doesn't require a lot of trading, where I can just sit and let the gains accumulate. Ultimately, yep. I think that's the person that I am.
Yes. Yep.
Oh, here it is. So at 677, and the price of Tesla now is 900 and something. I don't know if it's gone below that right recently. I know it did. It was at 1,000, and then with this current correction, it went to 900 something. I don't know if it's gotten to 800. But at $677, you're looking at a 7,100% gain with an MCP 35 as your hold. So again, something to look into.
Terrific. That I just love your mathematical. You're just your precision. It seems to me is based on you being you honor these rules that you have. Like you're just not double, triple checking yourself. You know exactly what you're doing when you're going in, right, and when you're coming out, and that just I imagine is so less stressful.
Yeah, I kind of think of it that way, and I don't even, like I said, I don't even think about it because anytime I make over 100% in a stock, that's fantastic.
Yeah. Yes, it is.
Yeah.
So these are just, I didn't
Yeah.
know we'd actually end up focusing so much on the MCP capital 35%. But again, this is just cursory personal observations. Definitely best use gains of 100% or more. It is a way to hold a super growth stock for an amazing run. And it's also a stalking method. I didn't highlight this. This is another thing we're kind of looking into. But it could also be a potential bottom, right? Because there's a lot of cases where like it might just get just over it, below it, and then it comes back. And then it could be a buy opportunity, knowing, with all that as a thought process, right? Not just be like, oh, this is a potential low. Like if you see it kind of setting up and the character changing. So if you did want to sell it at a retention of 50% gains or 60%, which is what I would probably do, I would still be watching it at this level as a potential re-entry.
Wow.
So yeah, so just another thing that I'm looking at. So there you go.
Pretty awesome.
Wow, thank you.
I think, you know what? I actually showed you the wrong presentation.
Well, it started, the first one, it had our name on the top.
I know. I didn't
around.
realize that.
We popped you around. It's all
You
good.
did.
You're
here,
sharing us. You're
this
brilliant.
is just real fast. One more thing.
Good,
So here's
please.
the Zoom. Here's the Zoom closeout.
Okay.
Now, Zoom is an example of where the midterm rule actually did better, 276%. And so let's just quickly look at the chart.
Yeah, please.
I think I pulled it up. Yeah, sorry about that.
Okay.
Uh-oh. Where are you? Not that. Oh, we don't want that.
We're getting so much bang for our buck, Pat.
I know, you really.
We're getting two presentations in one.
Yeah, so here's another example. So one more example for what I'm looking for. So in this case, this was also with the pandemic there, this low coincided, but Zoom was the only one going up, right? So it was the obvious leader in that time, although scary, because it's like, oh, everything's going down, but Zoom was what was keeping us all connected, right, as a world.
For sure.
I was buying it here at this 40-week line. It was very volatile in here, but I had a low cost position, because I talk about this 40-week line on the sell, but I'm also looking for it as my entry, especially on IPOs as they're transitioning to that institutional advance phase. So I'll start trying to build a position if I don't get a first mature base right away, and then I can buy more at the turbulence zone. And then that's what allowed me to withstand and hold on to these crazy gyrations. I mean, it still held the 10-week line. So really nothing was wrong with it. They were just such wild swings. But because I had early entries and I was just holding at that point, just holding on so I could hold on to something, right, during this crazy market, I was able to do that. And then I didn't sell it till this point right here. But I wanted to show you because here when it broke the 10-week line, the midterm rule was getting you out over here. Because again, it's a break of the 10-week line.
Right.
And I'm pretty sure it doesn't look like this was not a break. It has to break and then it has to even break below that. So that's why it was in here. And then the 40-week was even lower than that. So that's why in this case, since it topped pretty quickly, the midterm rule actually was a better rule in this case.
Makes
so that's
sense.
just what I wanted to highlight.
That's awesome. I see that. I see why you wanted to point that out. It's terrific. So if in closing, what would you say is your advice to look? There are traders that are sophisticated too. At certain points in their career, they're going to need to pivot, and I imagine this time right now, because of the way the market is, maybe there's some people thinking about that. So what would be your advice to a trader who is experienced? Who's fascinated by your conversation today? What would your advice to them be? Direction you point them?
Well, I think this is a really great time because the market is correcting. I mean, we need to be ready, right? So we can't turn away from it, but we're also at the beginning of the year. So it's a really great time to refocus and figure out what kind of person or what kind of trader, investor do you want to be this year? And what do you want for your life? Right? Do you want it to be all about investing, or do you want it to be more about family, but family and investing? And then really zero in on, the things that make you happy and how you want to spend your time. And then, I think then coordinate it, plan it accordingly. Because that's really, I've kind of gone through that transition, especially with after COVID and the pandemic. It's like, what do I really want to focus my life on? And that's again why I narrowed down what I'm focusing on for those reasons. I mean, I still enjoy it, I still love it, but I found that there's other things that are important in my life. And so I think this is just a great time because we're starting from clear decks. Yeah. And what do we want to focus on in our trading specifically, and then just hone that skill as best we can. And then also the other things in our life to bring us joy, and for our family and others.
For sure. It's just beautiful advice. I think it's just really, really wise pointing people in that direction, because if these 2 years have done anything, they should be teaching everybody that life is precious, and this is not a dress rehearsal, as that famous saying goes. This is it. So make sure you're present to that, is what I'm hearing you say.
Absolutely. Moments matter. I have that on my vision board. Moments matter.
Moments matter. I've not heard that, and I love it, and I probably will steal it from you and put it on my own Post-it. So
That's okay.
they are where it's all at, for sure. Not just in trading, but in life.
Right.
For sure. Kathy, thank you so much. Maybe you'll let us have you back one day. We can be
Sure. Absolutely. This was a great time.
Oh, good. I'm so glad.
Thank you.
So happy to have had you. And thank you for just making it so clear and agreeing to our last minute request for those charts. You're a doll for doing that. So thank you.
Yeah. And I'll anytime I can wear my Hawaiian shirt. So
That's right.
Even better.
Well, Shane sends his regards to you. And I can't wait to see, what all of our listeners think. But I'm just, very grateful to him for turning me on to you. So thank you for coming. And tell all your co-authors too. I can't wait to meet them, and thank them too for a great book. Thanks for making it so readable. It's just a fabulous read that I really feel, even though it's going to work for sophisticated traders, I think beginner traders also will get so much out of it. So thank you for it. We'll wrap it up there. Please let us know your comments, everybody. Those comments really matter to us. And thank you for watching. And please go and find Kathy's book because it's an incredible read. And we'll see you next time on The Wall Street Coach. Aloha for now.
This has been the Wall Street Coach Podcast with Kim Ann Curtin. You can find out more about her and her team online at thewallstreetcoach.com. If you've enjoyed this podcast, please consider leaving a 5-star review on iTunes. Thank you for listening.